Coming up on today's episode.
It's just keep looking, just keep trying, just keep looking until you find it's hard. Because especially in some areas, there's a lot, like I said, a lot of people going for the same properties. Some areas, properties sit on the market for ages. It might be a matter of, if you're not willing to wait, you might have to look at a different area with a little bit less competition.
Dodgy advice and bad decisions can cost you big in real estate. We're here to make sure that doesn't happen. Welcome to the No BS Real Estate Podcast. I'm your host, Jo Agresta, and it's time to take control of your property journey together.
Hey, I'm Natalie. I'm one of the brokers at FinMe. Today we're going to be talking about the government grants. Let's get into it.
Welcome back, everyone, to the No BS Real Estate Podcast, your listening how-to guide to the Aussie finance and real estate market. I'm your host, Jo Agresta. Now, today we're tackling government grants for home buyers, a topic that comes up constantly but somehow still manages to confuse the hell out of people. So, depending on where you look, grants are either the only way you'll ever buy a home or the fastest way to ruin your financial future. And most buyers are stuck somewhere in the middle, unsure who to believe and terrified of getting it wrong. So today we're doing it properly. No hype, no scare tactics, just a clear breakdown of how these grants actually work, who they're designed for, and when they make sense. Now, before we get into it, we're introducing something new on the show today, and each episode we're going to call out a no BS statement, a belief that gets thrown around online all the time, and by the end of the episode, me and Nat, our guest today, will decide whether it holds up or whether it's complete bullshit. So, today's no BS statement is: government grants hurt home buyers more than they help. So stick around, because by the end of the episode, we'll come back to that and decide whether it's been debunked or not. So Natalie Van Dort is our guest today, mortgage broker at FinMe. Nat works with first home buyers and home buyers every single day and helps people understand what they're eligible for and how to move forward without fear. So Nat, welcome to the show.
Thanks for having me, Jo.
Oh, man. Now, context. Well, normally I open up the show with how I met that person, and it's usually a networking event or maybe like through socials. You and I go way back.
We do.
We just did like a prelude into this episode that we did not record for obvious purposes and went down memory lane. Nat and I have known each other since 2011.
About that, yeah. I'd say so, yeah.
And we
14 years.
Far out. Oh, my God. She knows way too much about me. She saw me as a real estate agent back in the day.
Yes.
In full swing, and she was at Subaru back then.
I was, yep.
Trying to sell all of us cars, all of us who had tiny bits of money, putting them on finance. But it's cool because we've known each other for so long, and I remember you studying back then to become a mortgage broker and start to do the finance stuff. And I remember like seeing your setup at home with all the study and books back in Cranbourne. And I'm like, damn, I wonder how she's going to go. No, she's awesome. And then now we're here. We're on a podcast, and and I'm like, hey, you need to come on and talk about grants and all this shit rather than all the crap we talk about, which is better left unsaid.
Yes, very much so.
It's so good to have you here, Nat. And
thanks,
I'm going to have so much fun because I'm going to flash up photos of you and I from the past, and I'm sure our editor guy's going to put all of that montage.
Wonderful. I can't wait. I'm sure there's more bad ones of you than me, I hope.
Yeah, definitely. There's that one unfortunate footy photo that I got roasted for with Roz from Keezy.
I remember that. Yep.
Shocking. We'll leave that one out. That's just between me and Nat. But without further ado, we're going to talk government grants today. And the reason why I wanted to bring Nat in is because she's really passionate about it, but she's good at taking through like your first home buyers and everyday buyers who could be eligible, but also advising like when it's not right to do it. And I think this is an important episode because everyone just assumes that grants are the best thing ever. Do it and it works, and for a lot of people it doesn't. So let's crack in, and I think the best place to start is how you first got into broking and what kind of drew you away from the world of Subaru into mortgage broking.
Yeah, so as you said, started off in finance at Subaru, was there for quite a while. I think the biggest reason I moved away from it was the difference of what you're actually doing for clients. So in dealership land, you're working for the dealership. So you're trying to make the most money you can out of the finance for the dealership. Whereas when you go into mortgage world, the bank pays you regardless of what the client does. So you can genuinely try and find the best deal for the client. And
I like that.
Yeah, so much more relationship-based rather than transaction-based. So that was the reason for the switch for me.
I like that because I never thought of it that way, that regardless the bank's going to pay you, so you actually can service the customer
Correct. Yep.
fully. Yeah, that's
exactly. So there's not that conflict of interest as much as there is in dealership land. Well, there is no conflict in dealership land. That's who you work for. That's
true.
what it is. So, yeah, a lot more for the client rather than for the banks.
Yeah, makes sense.
Yeah.
And then I think it would be the same like if you worked at a bank, then you are working for
the bank.
The bank.
Correct.
So
yep.
Another point in the in the metaphorical belt of why you should use a broker. Now you're part of the team at FinMe.
Yep.
What does your role look like day to day? Like how are you helping people?
Yeah. So day to day, so I do mortgage broking and financial planning. So day to day, there'll be a combo of both. So on the mortgage broking side, it's going to be going out and seeing people. Some people like to meet face to face, especially if find a lot of first home buyers prefer that face to face. Yeah,
I'm
interaction.
shocked since COVID that people are not like, can't you just book in a meeting online and get it done?
There is some that still do, but I think when they're first starting out, it's the first time they've ever done it.
Yeah,
I think some people want to see it on a piece of paper in front of them in a way they can understand and grasp a lot better than a video call. But I find that second, third home buyers, investors, they're all about the phone calls. They're all about the not even a Teams meeting. They don't want to see it. They're like, this is what I've got, sort it out. So
far out. But it speaks volumes for that relationship because obviously if they're coming back to you like the second and third time, they know how you roll. Yeah. They know what to expect. So they're not like, you don't need to explain it to me, Nat. Worked with you twice.
Yep, this is what I've got. Just make it work.
Yep.
But so I find that a lot of the time going out and seeing a first home buyer also makes them feel a little bit more comfortable well because they're actually putting a face not on a screen to the name, and you can sort of have that easier conversation where you are writing down things, you are explaining with diagrams, you are sort of doing that a bit more. So days will have that sort of stuff in it. And then once you actually speak to someone, the rest of it's a lot of research. So putting in an application, that's easy. That's not the hard part. It's all the figuring out where to put it, where that person falls, what's going to be the best for them. Because sometimes it's not just about the rate. That's the other thing.
Yeah, well, you've got so many factors because even depending on who you're servicing, like I'm imagining, I've dealt with like as an advocate, I've dealt with the clients that have disability or have like special criteria. So a certain bank, like the big four, are not going to lend to them.
Correct.
But some other obscure bank will.
Exactly. But even within the big four, there's still really big differences in what they accept. So one bank, like say someone's self-employed and they've only just started out in the last year or two, one bank needs 2 years, the other bank wants 1 year.
Oh,
so there's big differences from bank to bank, even with the big four, that you sort of need to work your way around. Exactly. So a lot of the time after you speak to someone, the rest of it you're researching, you're doing calculations, you're figuring out where to put it, where's going to not only just be the cheapest, but where they can get what they need.
Yeah, right. So your days it would be like so varied, but also like the same at a lot of the time.
Exactly. Yeah. There's some days that you're out talking to people all day, and then I'll have a day in the office which is all paperwork, applications, researching. One of those days. So.
Oh my God, you guys must have like 10,000 systems. It's like just constant. Like, all right, give me the best loan.
Exactly. Yep.
And like when buyers first come to you, what are they usually most confused or stressed about?
I reckon the biggest thing is they're not sure if they can.
Oh, really?
That's probably the biggest thing. They're not sure if they've got enough deposits saved, if they can, do they make enough money?
Yeah.
That's probably the biggest concern is, am I ready?
Yeah.
And I mean, emotionally I can't tell someone if they're ready, but I can at least tell them on paper. On paper, you're ready.
Yeah.
So that's probably the biggest question I get asked is, can I do this now? Do I have enough?
It would be. So then I guess the next, do you find that most buyers, after you tell them like, yeah, you can, you're ready to go, that they still delay?
Sometimes, yep.
Because they're still not convinced?
Exactly, yes.
Mentally they're not ready maybe?
Yep, exactly. So sometimes they are still not sort of 100% sure. Yep. From there, I suggest, hey, get a pre-approval.
Yeah.
It doesn't mean anything. If you don't use it, you don't use it. But sometimes they need to see that the bank's actually said, if you want to do it, you can do it. Yeah. Or I just push people to go start having a look. Just start going to a couple of opens, looking at realestate.com.
Yeah.
Start doing that side of things, because then either they can go, nah, these things are well out of my budget, or they start getting excited about them and going, okay, that's not too bad.
So we can do it.
We can do it, and sort of, starting there.
Yeah, that's a good tip. It's like, just a bit of encouragement. But it's like talking to the broker first is one of my big pet peeves that I tell people, like, talk to them first. Don't go to realestate.com day one, because then that's where your dreams are shattered. Because
Correct.
You think 600,000 will buy you what it bought you, 6 years ago, 7 years ago, and you're finding out that those houses are now in the 800,000 range, and you're like, oh shit, I can buy a unit.
And that's probably the biggest reason that I tell people to get that pre-approval is for not crushing someone's hopes and dreams.
Yeah.
Like
you start looking in the wrong budget, it's like it sets you up for disappointment.
Exactly. Or you don't even look in a budget at all, and you just go and your offer gets accepted somewhere. You do it subject to finance, and then you realise that you can't do it. That's probably the biggest thing. So knowing exactly what you can spend and how much it's actually going to cost you, I think that's the biggest thing that you can have armed, have yourself armed with to get out there.
100%, because it's just peace of mind at the end of the day.
Correct.
Right. And one thing I hear like constantly is people saying like that they don't even know where to start, or they're scared of messing something up, or they're scared of losing a grant, or they're scared they'll make a decision that costs them shitloads in the long run, right? So before we break down the actual schemes, right, because this is another stepping stone that you'd go through with your clients.
Yep.
Why do government grants exist in the first place, and who are they actually designed to help?
So the government grants are all around first home buyers.
Yep.
So there's nothing else for investors or for people who already have houses or anything like that. So it's all around first home buyers and helping them get into the market quicker.
Yep. It makes it super simple, right?
Yep,
So
that's all. That's what they're there for.
So this episode is for you guys who are tuning in. If you were doubting it, going, is there a grant? Like, no, it's first home buyers.
First home buyers, that's it. Yep.
All right, first home, listen up. So I guess, what do you think people misunderstand most about the purpose of these grants?
I think how they work, or whether they can stack them, whether what you can get, what you can't get. I think the actual ins and outs of them are what people don't understand the most. They could just hear them: first home owners grant, first home buyers deposit scheme, help to buy. They're just sort of thrown around.
That's so true.
And they're not sure which one actually applies to them.
And that's something that you obviously as a broker can help them with, right? And I think a lot of people don't know that. They assume that it's some random entity like that has to have this specialist expertise, but it's like, no, often your broker understands all the grants and what's applicable, and then you can help them with the application. Is that right?
Correct. Well, most of them you actually apply during the loan process. So we do the application when we're applying for the loan, and the bank completes the application as part of your loan.
Oh, so it's done like...
It's done all streamlined. Yep. So say it's the deposit scheme, for example, the $10,000 grant, it can get applied for at the time of the loan, which we'll go into that grant later on anyway.
Yeah, well,
so they can all get done as part of your home loan application.
Oh, that's all right. Like,
makes
I don't
it a bit
mind
easier.
That. Yeah, it's much easier. Actually, now that I'm thinking about it, that's exactly what me and Viv did. And the broker did it. Oh, yeah, I remember that.
Yeah, that happened. Yeah.
Yeah, that did happen.
See, it's so streamlined, you didn't even notice.
No, I didn't even notice. I just remember signing a bunch of shit and going, that seems right.
Yeah, that's it. That looks good. That looks good.
That looks good. Viv was in charge of the finance. That wasn't my job.
You just signed what you were told.
Yeah, because I did all the conveyancing and I did all the real estate hunting. So I said, you
handballed that over.
Yeah, I was like, you need to do the mortgage stuff. Tell me what to do. I trust you. And she's really good with that stuff. But yeah, she won't do mortgage brokering. I'd love her too. And I guess in real life, who do you see benefiting most from the grants? Like outside of like, obviously you've said first home buyers, but like, is there a specific call it an avatar, if you will, like, that it's couples or singles, like who gets the most out of these grants typically?
I think it depends on the grant. I don't think that it's like a specific area of group of first home buyers. I think mainly it's people who might be renting. So saving for a deposit's a lot harder because you're spending money on rent. That's probably the biggest. I reckon that's the biggest one. Yeah, probably people who have got all these extra expenses they wouldn't have if they had their own home.
Yeah, it makes sense because when you're renting, you do have, or you're already doing it. It's like you're doing
correct.
bills and you're doing groceries and like you're managing a household, and rent is your pseudo mortgage, for example. So
Is
now
paying someone else's. Yep.
that's right. So it's like when you have to go and apply to it, it's like, yeah, I guess the lending criteria is also a bit of a struggle sometimes too.
Yeah.
Is it seen as a detriment? I think this is just a random off the cuff question I have, right? I think a lot of renters listening always write into us and they'll say, you know, but I'm renting and I just feel like I'll never be able to buy because I can't prove that I can, you know, with enough savings. And I'm thinking, but on the flip side, like, wouldn't the banks be more wanting to like lend to these guys because they can prove that they can pay a mortgage, they can pay bills, groceries, etc. Like, does that something that plays out a lot for you?
Well, rent can actually be helpful. So I know we'll go through the 5% in a second. But so if we jump to that 5% deposit scheme, you have to show 5% of genuine savings. So mum and dad can't give you the 5% unless you hide it in an account for 3 months. But
We don't talk about that.
we don't talk about that. But it has to be genuine savings. So people who are renting might not be able to get that genuine savings. So the banks will actually use the last 6 months of rental payments towards your genuine savings total.
Really?
Yep. So if you saved up, say your house is 600,000, you need 30 grand, and you've paid 10 grand in rent, you've saved up 20, that's 30 grand.
Oh, nice. So I didn't know that. That's a good little tip.
Yeah, but obviously you need still a 5% deposit in total. You can't
course,
just, you know,
you can't
but that
dodge it.
means if mum and dad are happy to help,
Yeah.
they can help you with that money and you can still meet that genuine savings
that's awesome.
definition. Yep.
Oh, awesome. I love that. And I guess one of the things now, like you said, let's move into the 5% deposit scheme, right? So today we're going to break down the different schemes that there are and how they help. So let's first go through 5% deposit scheme. Can you explain in plain English what the 5% deposit scheme actually is and how it works?
Yep. So in the past, normally you'd need a 20% deposit to avoid lender's mortgage insurance. Now, for anyone who doesn't know what lender's mortgage insurance is, does nothing for the actual client. It's for the bank that basically if you stop paying your house and they have to take your house, they recover their money.
Yeah.
That's what it's who it's there for. So normally if you could still borrow in the past 95% or 90% on a house, but you'd have to pay lender's mortgage insurance, which could be from 5 to 30 grand.
Yeah.
Depending on how much deposit you had.
True.
The other option was mum and dad went guarantor. They put up their house as security.
Yep.
And then you didn't need that much deposit and you didn't pay lender's mortgage insurance. Basically, with the grant, the government is mum and dad.
Yeah.
So they're putting up the security that if you don't pay the house, they'll cover the bank's losses.
Yeah.
So the bank doesn't have to charge you lender's mortgage insurance.
Right. And like I remember now, like for even Viv and I, we wanted to avoid LMI.
Yep.
And we went over our limit by 5K.
Yep.
And I was really annoyed. And probably upon reflection, we probably should have just paid it and it is what it is. But no, we got my parents to go guarantor for 5 grand because I was a tight ass.
Well, the banks would have said, no, you put up a whole house for 5 grand. They're happy.
She's like, okay.
Okay.
And I'm like, thank you. I don't want to pay it. It was already annoying.
It is. It's one of those annoying things that, like I said, does nothing for the homeowner.
Yeah.
It's
protection for the bank.
Protection for the bank. That if you don't pay and they got to repo the house and they don't get their money back, someone's paying them back.
Yeah.
Yep.
Put on insurance.
And that's all the government scheme is. They don't own a part of the house or anything like that. They're just going guarantor. That if anything goes wrong, they're covering the bank's expenses.
Got it. So, and that's why you're able to buy with a 5%
Correct.
deposit versus having to have a 20%.
Or paying the lender's mortgage insurance.
Yep. Awesome. So that's nice and clear. So then I guess, what do you think people misunderstand most about the purpose of like this grant in comparison to, we're going to get to it, but like the first homeowner grant?
Yep. I think I've had a lot of people asking about what the government's rights are over the property with that. There is none. So they've got no rights. The only thing that you can't do with your property is redraw until you're under the 80%. That's because obviously if the government's guaranteeing it, they're not going to keep letting you lend. Yeah.
Give you a bit more.
So that's the only difference. Whereas say if you pay lender's mortgage insurance at 95%, you'll always have that there. That if say you pay down the loan, you can then top back up to 95% in the future. But that's really the only thing. You don't have full freedom with that. But generally, we tend to not encourage people if you're over that 80% to be releasing the equity anyway.
Yeah, no.
So really, the government doesn't have any say in the property at all.
Yeah, okay. So, and I think that needs to be abundantly clear, right? They don't have anything to do with your house. I know that there's some rules, and I'll just ask you, like, are there as many restrictions with the 5% in comparison to first home buyer? Like, as in, I know, actually, you know what? I'm going to save it for the next one. Otherwise, I'm going to get ahead of myself.
Oh, good. Yep.
I'm going to park it and I'm going to come back and ask you once we've gone through them.
Easy.
So I guess what in this case, like when this scheme works well, what does that buyer like usually get out of it in the sense like they're obviously getting a house, they can buy, they can get access to what they need, and then they have to build up that equity, you said, to the 95%. No.
So they want to build the equity so the loan comes down.
Yeah.
Yeah.
Other way around. Yeah. We're not trying to make it worse, guys.
we want that LVR going down, not up.
Yep. Okay. Loan. What is it like?
Loan to value ratio.
Thank you.
That's the one.
So I guess who would be suited to that scheme and who would not? Like if you had a client come up to you and say like, cool, I'm eligible for, all these grants.
Yep.
Which one, how do you help them decide which one's the best one for them?
Yep. So the biggest difference with this grant versus say the first home buyers, this doesn't have to be a new house. This can be any house. And they have opened it up now where there's not as many caps on income. There used to be an income cap, which now there's not. You could only earn under a certain amount. So now you can earn
whatever you
need. Ideally, this is for someone who who has been saving and wants to get into the market quicker.
Yep.
Or they're renting and saving is going to take a lot longer, but they do have that 5% there.
Yeah.
But I think the biggest thing is entering the market quicker because for some people, sometimes trying to save more, the property price ends up
it's higher.
Exactly.
Yep.
So if someone can save, so we'll go back to the $600,000 house example. You need 120 grand for your 20%. So say it takes you a year to save 30 grand, which is a pretty bloody good effort.
Yeah, very good effort.
Very good effort. So say a year and you're into the property. Now, if you add another 3 years on that, that $600,000 property is not $600,000 anymore. If that's gone up by another 200K.
Yeah, you're outpriced.
That's another 40 grand you're saving. Add another year on. So it means that people can get in quicker without chasing the market to get that 20%.
Yep.
Or paying lender's mortgage insurance. Because a lot of people were still borrowing at those amounts, but paying
LMI.
The LMI, yeah.
Well, like I think that it's interesting, isn't it? Because I think with the 5% deposit scheme, it's a massive leg up. Like I really like this. Like I was talking to a few people, like I think my sister-in-law was one, and I'm like, they've made it so easy.
I like the scheme.
I really like this one.
I bought my first place with a 10% deposit and paid lender's mortgage insurance. It wasn't around.
Oh yeah,
then,
you know.
So I know at that point, if you could get a 10% deposit together and pay LMI, then it was, you're like, okay, I can get a house. Yep. So realistically, people were doing it before, but they were just paying more to do it.
Yeah, that's true because we qualified for the first home buyer grant, but we built.
Yeah, you built.
So we got a bit more for doing that. But it helped us out a lot because we had a decent deposit between me and Viv. Like we'd both separately saved and then just made the decision to buy. And I remember that was like our furnishing money.
Yeah.
And it was like, oh, well, yeah, we're good.
And coming back to having that good deposit. So the 5% deposit scheme, it's not locked in at 5%. So say you've saved up 10%.
Yeah.
You just won't pay the lender's mortgage insurance there. Yeah. So you don't have
have to like save to that limit.
No, correct. Or you don't have to only, if you've saved up heaps of money, you don't have to only put in that and have your cash sitting there going, oh, I wish I could have paid more off my loan. It's whatever it is between a 5 and 20% deposit that you don't have that you just don't pay lender's mortgage insurance for.
So if we talk eligibility for a second, because you mentioned some income caps and things like that, is there criteria that you need to meet to be able to do the 5%?
The main one is the genuine savings.
So that's the main
one. Yep, that's the one that they're super strict on. So by 5%, they basically look at the last 3 months of bank statements and see that money's either sat there or it's been built up.
Yeah, gotcha. So that's the key for this scheme. So
that's the main one, yep.
If you're not doing that or that doesn't sound like you've basically got 3 months, guys, to clean up your shit and make it look like you've saved.
Correct, yeah. Yep.
And like now this is where the internet really starts shouting, which brings us to our next segment, and this is Reddit Real Talk. So this is where we pulled together the real questions and statements from Reddit. No filters, no sugarcoating, because this is where a lot of buyers form their opinions and fears. So I'm going to read out exactly how they've been put up on Reddit, and they'll be on screen. And Nat's going to help us unpack what's valid, what's misunderstood, and what's just noise and general, bullshit. So let's get into it. You ready?
I'm ready.
Okay, the topic. This person writes, does the 5% scheme actually help? I keep seeing people say the 5% deposit scheme helps first home buyers, but honestly, it feels like it just pushes prices up and creates more competition. Has this scheme actually helped anyone, or is it just making things harder for buyers? Is that a fair criticism based on what you're seeing in real life?
Look, I think that it has pushed up prices a little bit and has created that little bit of more competition in the market.
Yeah.
But I don't think enough to outweigh the benefit of the scheme and having people be able
to actually
buy
enter.
properties. Because if there's competition, it means people who weren't able to buy properties are buying them.
Yeah, that's true.
So, if it wasn't working, there wouldn't be competition. So,
Fair.
And I mean, the other I suppose this was rectified a little bit with all the new investor laws and things coming in. That first home buyer market was also very much an investor market at that price point.
Yeah.
So I think the demand in that area with land tax and those bits and pieces has eased a little bit.
Yeah.
But yet when there's multiple people going for similar price, there's always going to be competition. But I think it has helped a lot more people than
hurt them.
Yeah.
Yep, that makes complete sense. And I was going to lead into my next question, but you answered it, so that's great. Let's move on to the next one. So this person writes, I qualify, but I still can't buy. I technically qualify for the 5% deposit scheme. I've saved, I've got a stable job, but I still can't get into the market. I feel like I'm doing everything right and still going backwards. What am I missing? So I guess when buyers feel like this, what's usually the missing piece, do you think, for this person?
That's a tough one. It's hard to know without what they mean by
they qualify, but
qualify, but they're not. They might be going for properties where there's a lot of people going for the same property. In that, it's just keep looking, just keep trying, just keep looking until find it's hard. Because especially in some areas, there's a lot, like I said, a lot of people going for the same properties. Some areas, properties sit on the market for ages. It might be a matter of if you're not willing to wait, you might have to look at a different area with a little bit less competition.
And do you have those conversations with your clients sometimes, like the ones that have kind of been with you for 6 months, still undecided, or they're just missing out on properties and offers because of where they're dedicated to buying? Do you ever have that discussion of, have you thought about buying here, or is that where your job kind of like you go, it's not mine?
I think it's something with housing that the client has to come to that conclusion themselves. I never want to tell someone where they should buy as a first home buyer. As an investment, I think it's a very different conversation.
Of course.
Because it's not emotional.
Yeah, no, and you're looking at numbers and growth.
It's transactional. It's looking at all that. But I think when it's someone's first home and if they're hell-bent on buying in that area, and they're a lot of the time, if they are that hell-bent, they're happy to wait. They're happy to wait for the right property. They've got the pre-approval there. They know how much they can spend, either they're renting or still living with mum and dad. Then they're happy to wait it out to find the right property. And I think that mainly comes down to area.
Yeah,
I don't think people are willing. I think they might be more sort of open to losing a bedroom, slightly smaller block, maybe needs a little bit of work. I think that's probably the conversation more than a change of location.
Right, that's
completely.
A good point. So it's like you're compromising on the makeup of the property. It's like, correct, I know you want a 4-bed and a 3-bath, but your budget's kind of screaming for a 3-bed, maybe a 1 or 2 bath.
Correct. Yep.
Yeah, and that's what you can afford in that location.
Exactly.
Because I always have this discussion about I hate the term first home buyer. I feel like there's a lot of pressure around it because the first home buyer the mentality is that they've got to get this dream home as their first home.
Yep.
I prefer that they change the language to starter home.
Yep.
It's like this is your starting point. It's not going to be your best house. It's just your starting point.
And I've actually found that a lot of people that I've been speaking to recently have that mentality now where it's, this is to get into the market.
Correct.
It's just in the market, let the equity do its thing.
Yep.
Whether you keep it for the year and then rent it out or whatever it might be. I think a lot of people are realising that, this isn't their forever home. They need to get in to start with.
That's right.
And then they let it grow, and they, whether it's 2 or 3 houses down the track, then they go for the forever home.
Correct.
But you don't have to do it on your first one.
No, and it's too much pressure. That's why I'm like, but partially, I think our generation in particular, we grew up with, you got to get your first house. And it's like, oh, my God.
Oh, my God.
And it's like, and then you have opinions from parents and friends and like, oh, God, if I get a shit house, I'm going to be judged. And then
my older sister came to my older sister's 18 years older than me, so it's like having a second mum. But she came to every bloody open with me, and her and my partner at the time would just war over it.
Oh, God.
Absolutely war over it. And I'm sitting there in the middle going,
yeah, you wouldn't.
The funny thing is, speaking of first house, the first house I wanted a theatre, I wanted a big backyard, and I wanted garage access for the dogs.
Right.
I got none of them. I got literally none of them in this house that we bought.
Wow.
But that property went up in value over the 5 odd years that we had it, that the next house that I bought had everything that I wanted.
Yeah.
And that's the thing. It was an entering the market thing, Yes, it didn't have everything straight then and there, but I bought it and it helped me buy the next one.
And I think that's an important lesson for people to hear. It's start getting it in your head that you're just entering.
Correct.
Let equity work for you, almost like an investment property. It's like you could buy this the same way you buy an investment, just with a balance of your lifestyle choices to make sure it does what it needs to do. So then that next house could be a year away. It could be 2 years. It could be 6. Who knows? But you've got the next option for that right property for your lifestyle. And shit changes. Like when
100%.
Especially when you buy for the first one. If you're not by yourself and you kind of know yourself properly, and you're buying with a partner.
And especially if you're buying in your 20s.
Oh, if you're buying.
Shit changes. Your job could change, your partner changes, everything can change so much that the last thing you want is to
have big commitments.
Big commitments like this. This is going to be my forever house.
Yeah. No,
so,
can get devastating.
Exactly.
So, no, that's fair. And I guess this last one here is the help to buy. All right. We haven't gone through help to buy, but we're going to today.
Yep.
So the topic is help to buy, too good to be true. The new help to buy shared equity scheme sounds amazing on paper, a small deposit and the government help to buy a home. But it honestly sounds too good to be true. What's the catch?
The catch is the government does own the percentage of the property. That's the biggest catch. So unlike the 5% deposit scheme where you're borrowing the whole lot and they're just going guarantor.
Yeah.
So you own, if it's down to like pure percentages of what it's based on, so you own 70% of the property. 2% is your deposit, 68% is your loan. The government actually pays the other 30%.
Oh, so far out.
Yep. So
they own it.
They own it. Yep. So they're physically buying the property with you.
Right. So I guess the incentive for the government there is that if you can't make your repayments, they're just going to put that house on the market.
The main incentive is they're more banking on the equity, so they make money off the equity.
Ah, okay.
Yep. So if they give you 100K, it's not 100K that you pay back; it's 30%.
Yep.
So that property goes up by whatever it might be. You owe them the 100,000 plus 30%
of that equity.
Of that equity. Yep.
Got it. That's an important distinction to make there because, like you said, the 5% deposit scheme is they go guarantor.
Yep,
so
correct.
it's just the LMI portion.
Yep.
That's being, that you're at risk of.
Yep.
In this case, though, it's not all your house.
Correct.
So then I guess here it says, one thing I wanted to ask about this specific post. What are people usually not understanding when they read about this scheme online?
So this is the fairly new one.
Yeah, that's right.
Yep. So I've finally done a bit of research on this one. I think the biggest thing people don't understand is that 30%
is owned.
Now, it does work both ways. The property goes down in value when you sell it. Their equity does go down. So it's not like they're going to eat into your equity if you lose money and you've got to pay back $100,000 regardless. If the property devalues, then their percentage of it does devalue as well. So that's the good thing. They don't just
take.
Don't just take it. It is a give and take. I have learned a bit more, like I said, a bit more about this grant, and there is some sort of situations where it is quite helpful.
Yeah.
Probably the biggest one is capacity.
Okay.
And how much you can borrow. because let's take the $600,000 house again.
She's
Yep,
back.
We're back to that one. Yep. If we're borrowing 95%, we're borrowing $570K. So
Yep.
we've got to get servicing for $570K. If we're borrowing 30% or 68% of 600,000, quick math, 180, 420-ish we're borrowing.
Yeah.
Obviously, servicing's a lot easier.
Yeah.
So
Gotcha.
that's probably one of the bigger things. It does make servicing that little bit easier. So if we do have maybe car loans, we do have kids, so things are a bit harder at the moment, or then they might be for the next, if you've got a car loan, maybe 5 years, whatever it might be.
Yep.
But you know you can afford the house.
Yeah,
it's
you know
just
you
the
can do
bank
it.
says that it's a bit tighter because they've got their own numbers. That's when it can sort of come in handy.
Yeah, that makes sense. So it's like the actual criteria to kind of get into it is a bit more lenient.
In how much, in
Yeah.
how much income you need.
Yeah, gotcha. So that was those were the Reddit highlights, and same thing over and over again. People aren't stupid; they're just missing clear explanations, I think. And the grants are confusing. And I think when you don't have a good broker that understands them like the way you do, it makes the process so much worse.
Yeah,
like
definitely.
this is why I left it with Viv. She started talking grants, and I'm like, just the free money.
Free money, get the money, get
Yeah,
the
just
money.
get it.
Yeah, get the money.
So let's talk about the traditional, the one that everyone knows.
Yep.
The first homeowner grant.
Yep.
All right. So can you explain what the 10 grand first homeowner grant actually applies to, or who it applies to, and
Yep.
how it actually applies?
So it applies to first home buyers, funnily enough.
Wow.
Yep,
Weird.
$10,000.
Yep.
So it used to be for everyone back in the day.
Yeah, it did.
Now there's a couple of criteria around the house. So we've got the easiest criteria is you're building a house.
Yep.
So then it goes towards the construction, not the land component. It can only go towards the construction. That's the first one. Second one is you're buying a newly built house. So off the plan, townhouse or whatever it might be, and you're buying it straight from the builder.
Yep.
It's never been lived in. You get your $10,000 there.
Yep.
The third one, which not a lot of people know about, is if the house is less than 5 years old and it's the first time it's being sold as a house, it also applies.
Oh, yeah, I have heard that.
Yep. So what I mean by first time, say your place is less than 5 years old.
Yep.
You bought it as land.
Yeah,
You didn't
that's
buy
right.
it as a house. So if you go to sell it now, that would if the person buying it would be eligible for the $10,000 first home buyer scheme because it's the first time it's being sold as a house.
Yeah, right.
Yep.
That's so interesting. So first time being sold,
With less than 5 years old.
less than 5 years.
Yep.
So that's like if I want to be kind to the next person, put a
Correct.
house on the market before 5 years,
Yep.
and then let them get their grant.
That's it.
Yeah, that's not bad because then they're still under our warranty as well.
Correct.
Yeah.
So you can stack these as well. So
Oh, talk to me about that. What do you mean?
if you've got a 5% deposit
Yep.
and you're buying a brand new house or you're building, you get the you get the $10,000 as well.
Really?
Yep. But you can't use the $10,000 as genuine savings.
So,
But this is a good example of the rent. So if you've
Yeah.
rented for the last if you've spent 10 grand in rent in the last 6 months,
Yep.
the first $10,000 comes in. You've got your 5%. You can show 5% genuine. We stack them together.
Oh, wow.
Yeah.
So have you done that for some clients before?
Yep. We've used them stacked. Yep.
That's unreal, actually. Like that, in terms of incentive and getting into the market, like the government's actually really trying to help you
It's
out.
not bad. And then say you add that with at 600,000 with no stamp duty.
Yeah.
So you got no LMI, no stamp duty, $10,000 on top. So yeah, you can sort of
it's
play mix
beautiful.
and match with the grants.
I love that. I don't think a lot of people know that they can do that. It's
Yeah.
kind of like, I think because back when our parents probably did it, and that's the advice that typically everyone gets, is no, you only qualify for one.
Yep,
Don't
yep.
get greedy. Ask for one.
Not in conjunction with any other offer. No.
Yeah, it's like, real strict, and you're like in your head going, well, that's all I can do.
Yeah.
And if you don't have and like I stress this, like the reason I do this podcast is to bring you people and professionals that I vouch for, not just because I've known Nat since she started out, like, but more from a sense of I've seen them at work, I've seen what they do, and like the difference of having a good broker, a good buyer's agent, a good conveyancer can make or break your deal. If your broker has told you that you can't stack these deals, no, wrong broker, change, talk to someone else. You need someone that knows their stuff, because you'd be helping a lot of people, like seeing their scenario go, well, if you find that house and you buy it, you can qualify for both and we can
Yep,
do it.
exactly.
Like, you would have a lot of relief around that, I think, or people going, oh, wow. It's like, fuck yeah.
Especially when people know they're getting either free money or no fees.
Yeah.
People are super happy.
Yeah,
So-
100%. Yeah, it's easy. That's why I
It's
said to
easy,
him,
exactly. So, yeah, where we can, we try and use these grants wherever
boost.
we can to boost it up, yeah.
And I guess, like, you know, in terms of the next one, which I know you've got some opinions about. So
Yep.
the last one is the government shared equity help to buy scheme. So
Go through that already.
did we?
Jumped.
Oh, did I go back twice?
Have you done the same page twice?
So I guess, like, you know, in terms of all these schemes, right, I want to talk about, like, the big fear, like the am I worse off long term? Because I think people, like, when they're applying and they're in that, you know, emotional state of, cool, I qualify for the grant, get the house, and then everything is like go, go, go. And then they kind of don't think about the repercussions or the risk afterwards, or maybe their broker hasn't taken them through it. So I want to unpack that a little bit. A lot of buyers worry that they'll be worse off long term because they're borrowing with grants or they're borrowing more with grants. How do you explain that trade-off when you're going through it?
I think the biggest trade-off, and I think we touched on this briefly before, is how long will it take you to not use that grant?
Yeah.
So
okay.
say the 5%, if you were to, and say mum and dad aren't an option.
Yeah.
So if you use that 5% grant to buy a property, how long would it take you to not use that grant and save up the extra 15?
Yeah, that's right. The time to buy.
The time to buy, exactly.
Yeah.
So, look, property's always gone up. So, look, it does come backwards sometimes, but in the history of
100
property,
plus years,
it's
up.
always gone up. It's more expensive than it was 10 years ago, more expensive than 10 years before that. So if you can get into the market quicker, then I don't think there's a downside. And if obviously if you can afford it as well, that's the other thing.
Yeah,
if you can afford to borrow 95%, I don't think there's a downside to getting into the market earlier with the grant, because yes, you are borrowing more,
Yeah.
but in theory, the price of the property going up, if you were to save that money, you're going to be borrowing more down the track to buy a higher amount anyway.
Yes, it's like that's the biggest thing.
That's the biggest thing. In terms of the help to buy, obviously the biggest thing is that you lose 30% of your equity.
Yeah.
I mean, you never really owned it, but as it goes up in the future, 30% of what the property is going up by isn't yours.
And that is only like executed when you sell the house, isn't it?
If you sell, or if you can actually
Refinance.
buy out, you can refinance and buy out the government. So
okay.
say the property goes up in 5 years, or say it was an income thing
Yep.
that you didn't have the income that supported borrowing the extra, and you got a new job or a promotion or whatever it is, and now you do. You can buy out the government and own your house again.
Yeah, right.
Yep. So there are ways out of it. You're not stuck. And then once again, you just pay them out their equity share.
Yeah, so that's the shared deposit scheme stuff.
That's the shared, yep.
Yeah, so
The
that's
help to buy.
So the help to buy. In your opinion, like this is obviously, you know, your point of view.
Yep.
Do you like that help to buy scheme, or do you feel like it's a good one or not as good as the other two?
I think in certain circumstances it can work.
Yeah.
If you have the option, if you met the criteria of borrowing 95% and you had the 5% deposit, I would much prefer the 5% deposit scheme
Yeah.
over
The help
giving
to buy.
the help to buy, giving the 30% away.
Yeah.
If you're someone who, single mum, renting, has scraped 2% deposit and you're spending an arm and leg on rent each month, and because of the way the bank assesses it, you can only borrow 68% and you want to own a home, then I think it's a great scheme
Yeah.
because it works for them.
So this comes back to that everyone's different.
Everyone is different. Yep,
So it's assessed really for you. You're just taking that person's situation into account.
correct.
And then their finances, of course,
Yep.
and then where they want to buy, what they want to buy, and then seeing what's appropriate.
Correct.
So it's not like one grant is worse than the other.
Yeah, not one's supremely better, except for the $10,000 first home buyer scheme, because that's just $10,000 of the free money if you apply, like if you're eligible for it.
Apply.
Yep, no drawbacks on that whatsoever. That one's great. But for the other two, I think it's more comes down to the individual circumstances, what they can afford, what they're comfortable with, how much deposit, and what things look like if they didn't do it this way, and how doable it is.
Because that's the other question, right? Is in comparison to, like, we've got 5%, we've got the first home buyer grant help to buy, right?
Yep.
When I'm looking at like the cons or the potential like pitfalls? What are the risks that you typically have to warn people about? Like, let's say they're all eligible for any of them,
Yep.
right? And they're in a good position, and it's like, when do you have to warn them? I know Help to Buy, we've kind of gone through that risk.
Yep.
The biggest risk is that they have the equity.
Yep.
Are there any other risks like for the other ones or limitations with the house?
Probably the biggest risk with the 95%
Yeah.
loan is if something happens to you and you do have to sell and the property market is backwards a little bit,
Yeah.
is paying back the loan.
Oh shit.
That's
Yeah.
probably the biggest drawback, and that depends. And like I said, most people won't be in that situation
Yeah.
where they have to just up and sell all of a sudden. You hope,
Yeah.
but that's probably the biggest drawback is borrowing that amount of money against the asset.
and then having
If
to
things
pay
go
it back.
backwards, yeah, if it is just happens to be in that dip of the market that you have to sell, then you need to come up with that money.
Yeah, that's awful. I
Yeah.
hope none of you ever go through that. So just be really sure.
I can say I haven't had that happen to any of my clients
Oh,
at
good.
this stage, but it is one of those hypothetical drawbacks that could happen.
And like this is just part of letting you guys know
Yeah.
the risks. So
Correct.
it's like if you're in that early 20s and you're trying to buy a house to save your relationship, don't do it. Don't do it with the scheme on top of your heads. Just screw yourselves over.
Yeah.
Just a bit of life advice. You didn't ask for it, but you got it anyway. Now, this has been such a good conversation. I guess we have to bring it back to the no BS statement I read out at the start.
Yep.
Just a reminder, the statement was government grants hurt buyers more than they help. After everything we've unpacked today, does that statement actually hold up?
I think they help more. Yes, they do create a bit of extra competition. Yes, they have driven up prices a little bit.
Yeah, of course.
But I think overall they've helped a lot more people into the market
yeah.
than
keeping-
keeping people out. Yeah, correct.
Yeah, I agree with that 100%. So I would say that that's bullshit. I'm going to stamp that with a bullshit sign. So, and do you reckon it needs a lot more nuance than the internet gives it? Like, as in, like, do we need to dig in more to like each buyer's specific scenario?
It definitely
and see?
needs to be, case by case rather than someone just stamping, you get
Broadly.
this. Yeah, you get this, you get this.
Yeah.
I think it comes down to the individual and their individual assessment. So definitely if you think you might be eligible, talk to a broker.
Yep.
They'll let you know, hopefully, depending who you speak to, they'll let you know which grants you're eligible for and whether you actually meet the criteria inside of that as well.
I love it. Thank you so much, Nat. And on top of that, make sure you contact Nat. Even if it's just a call, I always say it costs nothing to pick up the phone and ask a question.
Correct.
It might change everything. It might not. And like, that's totally cool, but you've made the next step. So if you have to take a next step today and you've someone who's been tossing and turning about these government grants, you don't understand it, and you just have a question, give Nat a buzz. Her details are on screen and in the show notes below. So Nat, thank you so much for coming on the show.
No props. Thanks for having me.
Of course, and we'll have you back again. I'm sure we're going to unpack more with you in the future. I'm not going to let you
forward to
go that easy. So the reality is that grants aren't good or bad on their own. They're tools, and like any tool, they can help you or hurt you depending on how you use them and whether you actually understand what you're signing up for. So Nat, for someone listening who feels unsure and just wants clarity before making a move, what's one step that they could take today?
Honestly, speaking to someone.
Yep.
That's the biggest thing. If you're not sure, just reach out, see where you sit, see what you can do, because you don't know what you don't know. So you're better off finding out.
I love it. I love that saying too. You don't know what you don't know. And if this episode helped you, share it with someone who's stuck in the first home buyer spiral and doesn't know who to trust. And until next time, I'm Jo Agresta, and this has been the No BS Real Estate Podcast. Thanks for listening. That's a wrap for this episode of the No BS Real Estate Podcast, powered by Abodey AI. If you found this conversation helpful, don't forget to subscribe, leave a review, and share this episode with someone who might need it. If you're looking for more guidance on your home buying journey, you can visit www.abodey.com.au for expert advice, property insights, and the tools you need to find the right home with confidence. If you're already on your journey, you can also download our app. Just search Abodey AI on the App Store or Google Play. Have any questions or want to connect, you can follow us on Instagram at abodey.com.au or send us a message. We'd love to hear from you. Thanks for tuning in, and we'll catch you in the next episode.